A Benjamin Franklin è spesso attribuito il detto "lavora bene facendo del bene". Questa saggezza ha plasmato la cultura societaria di Franklin Templeton dai nostri inizi nel 1947.
Responsible investing is part of the DNA of Franklin Templeton.
L'azienda riconosce l'importanza dei fattori ambientali, sociali e di governance, sia nelle decisioni di investimento, sia nel modo in cui gestiamo la nostra attività.
For ESG investing to be effective, it has to be embedded in the research process and not imposed.
Ecco perché in Franklin Templeton l'integrazione ESG è condotta da professionisti dell'investimento e supportata da un team di specialisti ESG dedicati. Siamo impegnati nell'analisi ESG perché ci rende investitori più consapevoli.
There are going to be first movers, people who are taking steps which you can anticipate are going to do positive things to corporate earnings, to market share, competitiveness, you name it.
We don't see the incorporation of ESG analysis as being a trade-off with performance. At its heart, we view this information as really deepening our financial analysis.
L'analisi ESG è allineata con l'investimento attivo sui fondamentali. Franklin Templeton analizza approfonditamente i criteri ESG, elementi quali il consumo di energia, i rifiuti e l'utilizzo idrico, la diversità societaria, i rapporti con la comunità locale, la sicurezza dei dati e politiche di approvvigionamento etiche, tutti finalizzati a valutare rischi e opportunità di investimento. I dati ci consentono di valutare la capacità futura degli emittenti di gestire rischi strategici di più lungo termine, che possono riplasmare il loro vantaggio competitivo.
We are focusing on looking beyond just ESG integration into products such as thematic funds. We're thinking about advocacy funds. We're thinking about direct, measurable impact funds. We think a platform of funds would really be beneficial.
Franklin Templeton partecipa regolarmente a iniziative del settore e ad organizzazioni che sostengono i principi di investimento responsabile. I clienti possono contare su Franklin Templeton per essere buoni investitori globali.
ESG is core to our investment philosophy, which is as an active manager to consider risks and to provide long-term sustainable investments for our clients.
Ci sentiamo veramente così, non solo nel modo in cui gestiamo gli asset, ma anche nel modo in cui operiamo come azienda, come trattiamo le persone e come ci comportiamo nella comunità. Lavora bene facendo del bene. Franklin Templeton Investments. Reach for better.
Un buon pomeriggio a tutti, sono Michele Quinto, il co-branch manager di Franklin Templeton Italia. Benvenuti. Come avete visto in questo video, oggi parleremo di ESG. Parleremo di ESG in Franklin Templeton da un punto di vista diciamo diverso rispetto a quello che avete visto fare anche ai nostri competitor. Il punto di vista di Franklin Templeton sull'ESG non è soltanto legato al prodotto, all'innovazione di prodotto, al tentativo di costruire dei portafogli che abbiano al loro interno dei contenuti etici o di sostenibilità o legati all'ambiente. Il nostro sforzo è stato quello di andare un po' alla fonte del problema o dell'opportunità, cercando come società di integrare i fattori ESG all'interno dei processi di investimento. Quindi abbiamo chiesto ai nostri team di investimento di integrare all'interno della loro ricerca questi fattori ESG. Secondo noi sono fattori imprescindibili ormai, sono fattori complementari a quello che già facciamo, perché un gestore attivo, avendo come punto di riferimento l'analisi fondamentale, deve andare oltre la mera lettura dei bilanci, la mera lettura dei dati finanziari. Deve guardare anche fattori come l'ambiente, fattori sociali, fattori legati alla governance, ed è ormai dimostrato che questi fattori rappresentano un vantaggio competitivo per le aziende ed è ormai dimostrato che quindi riflesso in un portafoglio questo ha un impatto positivo sulle performance. Dicevo prima, il nostro punto di vista diverso rispetto ai competitor è dettato in particolare da una metodologia che abbiamo lanciato internamente. La metodologia è stata lanciata dal nostro team di investimento forse più importante, che è il Global Macro Team, è il team di Michael Asenstab, è il team che gestisce i fondi Global Total Return e Global Bond. Quindi oggi approfitteremo di questa occasione anche magari per entrare nei portafogli e cercando di farvi capire come questi fattori ESG vengono valutati e come sono inseriti all'interno del processo decisionale che porta il team di Asestab ad allocare i suoi portafogli. Tornando invece agli ESG, quindi questo team non ha fatto altro che sviluppare oppure formalizzare una metodologia. Questa metodologia è basata su un indicatore che si chiama Templeton Global Macro ESG ed è un indicatore molto semplice, un indicatore numerico che ha una caratteristica molto importante. Mira alla valutazione degli stati sovrani. Quindi siamo tra le poche case che guarda il mondo ESG non da un punto di vista delle aziende, ma dagli stati sovrani. Quindi noi diamo un punteggio a questi stati sovrani, quindi li elenchiamo all'interno di una classifica, facciamo analisi su 50 paesi. Ma la cosa ancora più importante è che non fotografiamo soltanto lo stato di questi fattori ESG in questi paesi, ma tentiamo di andare oltre, di fare un'analisi prospettica, un'analisi di previsione. Alla fine cerchiamo di capire quali di questi paesi saranno maggiormente avvantaggiati dal fatto che progrediscono da un punto di vista dell'ambiente, dei fattori sociali e da un punto di vista della governance. Questo è molto collegato al portafoglio, cioè una linea sottile che collega i fattori ESG e le performance dei portafogli. Perché se un paese inizia a progredire, ad evolvere attraverso l'ambiente, attraverso migliori politiche ambientali, attraverso politiche sociali più efficienti e attraverso una governance che è più credibile, alla fine migliorano le sue condizioni finanziarie e da lì migliorano i suoi fondamentali e da lì aumenta il peso nei nostri portafogli. Questo è oggi quello che cercheremo di dimostrarvi. Lo faremo con un ospite che è Vivek Ahuja. Lui è il portfolio manager e Research Analyst del Global Macro Team. Vivek ha 13 anni di esperienza all'interno di Templeton, quindi ha lavorato e lavora spalla a spalla con Asestab su questi temi, è specializzato in particolare sul tema dell'ESG, di questo modello, ha più di 17 anni di esperienza nel nostro settore, quindi una persona che ha attraversato diversi momenti del mercato. Bene, prima di parlare del tema ESG ne approfittiamo quindi per inquadrare un attimino il tema anche da un punto di vista del mercato, perché è vero valutare i fattori ESG, ma non li possiamo valutare se non li contestualizziamo. Quindi ne approfitteremo anche per darvi alcune indicazioni su quello che oggi è la nostra lettura del mercato, quali sono i trend più importanti, i movimenti della Fed, la crescita economica, quindi faremo in primis una panoramica sui mercati e poi entreremo invece nelle specifiche di questo metodo ESG. Credo che alla fine ci sarà anche un piccolo riferimento all'Italia, al nostro paese, infatti chiederemo a Vivek di farci capire come usciamo come paese da questa metodologia. Gli ultimi minuti saranno dedicati a Massimiliano Grillo che invece vi rappresenterà il posizionamento oggi del Global Bond e del Total Return, quindi abbiamo l'occasione anche per darvi un po' di informazioni aggiornate sul portafoglio, poi gli ultimi 5 minuti li dedichiamo alla sessione Q&A. Bene, credo che abbiate tutti, a chi servono, le cuffie per la traduzione. A questo punto lascio la parola al mio collega, per chi non ce le ha, magari fuori credo che ce ne siano ancora di disponibili. A questo punto chiamo Vivek sul palco per la sua presentazione e vi auguro una buona visione. Ciao a tutti. Vivek.
Grazie. Good afternoon, everyone, and very warm welcome. It's been an extremely interesting environment for us as a global investor. Means we are sitting in an environment where people are talking about, is the global growth moderating? Do we still have opportunities both in terms of developed market and emerging market? And where exactly are the interest rates going? So we have these couple of key points which we wanted to share, but we also wanted to take the opportunity to do a deep dive in terms of how to use ESG specifically while looking in terms of a country analysis. Now, doing a ESG on a corporate its own methodology, but when we run a broader ESG approach for a sovereign analysis, I think there are multiple interesting aspects. But before that, just going to spend a couple of slides in terms of running our current market outlook and try to share with you all our insights in terms of the US economy, where exactly the growth is according to our perspective, what does it mean for the interest rate environment, and then move to other developed economies including Europe and Japan. No market outlook can be complete without talking about China, so that's the other aspect where I would spend some time really in terms of looking at the positives and negative in that part of the world. But starting with the most interesting and most debatable question, is US getting into recession? How is the growth cycle? Where does it really stand? And what really the economy is indicating today? Now, when we look at US economy, there are some long-term structural challenges which appears today. Now, historically, Republicans were supposed to be tight on fiscal policies, and Democrats, they were supposed to be more loose on the fiscal policy. Now, today when we look at the broader environment in US, all the government wants to spend more. That means they want to pursue loose fiscal policy, and as a result, there would be a higher issuance by the Treasury. This really is going to lead to a more structural shift in terms of the demand-supply situation in US. Now, historically, we have seen the world funding the US deficit. China was one of the biggest buyers of the US Treasury. OPEC economies have been one of the large investors, and so were the emerging market reserve managers. And since 2009, starting of the financial crisis, we had seen the central bank in US also accumulating the treasury. But today, at a time where the fiscal deficit is widening, most of these buyers are also disappearing. Fed has moved to negative. So if you look at the 2018-2020, they have been shrinking its balance sheet, although they have laid out the plan to end the balance sheet reduction and probably maintain the balance sheet at these levels. But what about China? China doesn't appear to be coming back into the market. Where the oil prices are, OPEC nations, they don't have enough surplus. Emerging market economies, their current account savings itself have reduced, and they are trying to diversify their reserve base. So who is going to buy the ever expanding issuance of the US Treasury? And what we really believe is the orange part, almost 2.3 trillion worth of US Treasury for the period 2018 and 2020 needs to be absorbed by the domestic investors. And these domestic investors are very different compared to the policy buyers. When Fed was buying US Treasury, it was not buying treasuries to make money. Underlying objective was to support the economy. But when interest rate sensitive or economic buyers, they buy an asset class, the underlying objective is to maximize return. And that's why we believe the valuation of the US Treasury is now going to be aligned with fundamentals, not driven by what the central bank is doing. So that's one point which we believe is going to keep putting pressure, especially on the long maturity bonds in US. The second one is about where US economy is in terms of the growth cycle. One key driver for the US economy is the domestic consumption. That's the backbone. And to really get a good feel in terms of the consumption, we need to look at the labor data. Now, the labor market in US is extremely robust, or rather we would argue that US is in above full employment. And the reason? The dark blue line, which is the unemployment, is now below the orange line, which is the Nehru. Basically, it is the break-even level of unemployment below which the wage inflation pressure starts. And today, US job market is overheated, leading to a potential higher wage inflation within the economy. The other thing which really is going to put pressure is that the current government is pursuing a tight labor policy, making it difficult for the corporates to hire foreign talent. So on one hand, you have a full employment. On the other hand, you're making policies which is making the labor market even more tight. So we do really see wage inflation coming in. But from a growth perspective, that's not bad. Very, very robust labor market, job market, plus you have wage inflation, people have more money, consumption is going to be better. So we don't really buy the argument that US economy is getting into a recession. Certainly, it's in a matured growth cycle. There is some amount of contraction because US is not supposed to grow at 3 or 3.25%. We think the growth would slow down close to the potential level, which is 2%, but that's still a reasonable growth for the US economy. Even if you look at the consumer sentiments, now the chart which is on the right hand side really will tell you how strong the consumer sentiment is, and that also is driven by the strength of the labor market, improving wage pressure, which is allowing consumers to spend more money. Before I end in terms of the US economy, just one perspective in terms of why that thesis of US getting into the recession probably is not correct. We are not yet at the inflection point, and I think one way really to look at is through 1948 different reasons or lead indicators for the recession in US. One of the key factors which we really watch is there a sign of an overcapacity or overinvestment? But if you look at the chart here, the blue line, which is the cyclical sector, as a percentage of GDP, they are way, way below the long-term average. Now, this really indicates that US economy has not seen overcapacity or overinvestment, so you don't need a recession to cleanse the system. Even if you look at the other factors like oil prices, historically, US economy has got into recession because of the oil price shock, which has a negative impact on consumption. But today, with the oil price being close to $60 a barrel, we rather believe the oil prices are pro-consumption rather than anti-consumption. The third reason which we have seen as a lead indicator or the reason for the economy to get into recession is a very tight monetary policy environment. But that's not the case today. We rather think Fed is maintaining a more loose or is behind in terms of the monetary policy. So we don't really see the signs of the recession visible today. But again, we are not discarding that US is in a matured growth cycle, but we are not there yet, which is not bad for the world. US economy growing close to the potential level would support the global growth. Now, moving from US to other developed markets, starting from Europe, clearly because we do see headwinds within the European economy, and that's more driven by rising populism. But one good way really to navigate the journey over last 10 years in terms of what's been happening in Europe is to look at this region with two broad pillars. One is the economy and the second is the politics. So if we go back to 2010, 2011, the Greece crisis time, we actually had large political willingness to keep the union intact at any cost. And that's why the package was prepared for Greece. Economy was not doing well, but the political environment was quite solid. So between the two pillars, economy not that great, politics reasonably solid. When we move into probably beyond 2015, we did see we did see signs of economy improving in Europe. So economy as a pillar became a solid support, but that was a time where we saw increasing populism, and we did see reasonable amount of nationalist party gaining more and more momentum. So again, you had one pillar, economy, doing solid, but politics became challenging, driven by rising populism. But today in 2019, I think for the first time, we would argue that economy is in a soft patch and politics, populism, has further gone into the mainframe politics. So that means both the pillar, for the first time, appears to be weak. And that we are trying to extend to understand what should be the fair value of the euro in this environment. And that goes for Japan too. When you look at Japan, there is large limitation on central bank to do much on the monetary policy normalization. They have missed inflation target, they have missed growth target, they are not able to improve their fiscal situation. And that clearly limits what they can do in terms of policy normalization, and they would maintain low interest rate for a prolonged period of time, again making the currency probably more weak given the interest rate differential dynamics. So within the developed market world, we do understand Japan and Europe are putting some drag in terms of the global growth, but US growing at 2% does support or neutralize some of that impact. Now moving into China before we jump into a couple of emerging markets, one thing about China which we need to really look at or be sensitive about is that China is not the same China 10 years back. Today it's a $13 trillion economy and it is not supposed to grow at 7 or 8%. So some amount of soft landing or moderate growth is not bad. What we really need to focus is the quality of growth, not just the quantity. Now, China has seen a progress from investment to consumption, dominance of service sector over manufacturing, which all was great, and they were pursuing deleveraging because that economy has huge debt as a percentage of GDP. But driven by the US-China trade conflict, that deleveraging has probably slowed down, which is not that great. Financial system issues, again, needs to be looked at. Overcapacity within the system needs to be addressed. But that doesn't mean these swords are hanging as an immediate threat. We actually believe that China has both monetary and fiscal policy levers to support the growth, and for coming couple of years, they would be able to maintain growth at these levels. So again, from China, maybe a moderating growth, but they have sufficient room to maintain growth close to 5.5–6% level, which is not bad. So just as a background, as a summary, US growth is fine, looks okay. China growth maybe not that robust, but still growing at 6% for a $13 trillion economy is not bad. And then when we look at in terms of the other developed market, maybe some amount of soft patch. So how do you play emerging market? I think we play emerging market in a very specific, constructive manner because you have close to $10 trillion worth of bonds today trading in the negative territory. Spreads are getting compressed, so there is hunger for yield. And we find that hunger for yield really would take people to many of the emerging market world. But again, I think the mistake most of the investors are doing is they're trying to capture the market beta. And we don't really believe that market beta is going to give much upside because when you look at emerging market world, you have Turkey, you have South Africa, which probably would be a big drag. So we need to stay away from markets like Venezuela, Russia, Turkey, South Africa, and try to focus on few economies where you see structural reforms, good valuation, good policy environment. So we like places like Argentina, we like Brazil, we like Indonesia, just to name the few. And these economies are not linked or over-dependent in terms of the global headwinds. They are more driven by their own internal stories, which makes them really attractive and like an idiosyncratic decoupled story in today's world. Now, just to highlight Brazil as an illustration, now we have seen this economy post-election progressing in an impressive manner. They're talking about a solid pension reforms. Fiscal deficit position has bottomed out and we see some gradual improvement. Banking sector, the non-performing assets have again bottomed out. Credit or lending is picking up. And lastly, the job market is again shining. So a good policy, an orthodox policy, brings about confidence, and this government has set a good team of economic advisors with good credibility, and we really think they would make difference. So we would like to capture stories like Argentina, which is doing right policies, story like Brazil, which is pursuing orthodox policies, Indonesia, which is spending on infrastructure, and try to look at these focus markets rather than just chasing the broader emerging market. Now, moving into ESG and how do we really implement ESG in terms of our investment? Now, one thing about investing in a country is to focus on governance. And over decades, we've been talking about investing through solid governance. But now we wanted to quantify it. We wanted to have a very transparent approach in our ESG. And what we have done, we have come up with a proprietary index which looks at 13 parameters across environment, social and governance, with environment having 20% weightage, social and governance 40% each. The reason we have kept a smaller weightage for the environment is because it is a very long-term aspect in terms of having an impact in terms of a country. But again, nonetheless, we do understand the criticality, and our focus on the 3 parameters within the environment really captures how we need to address it more from a more sustainable economy. But the critical thing, and probably what really differentiates us from an ESG aspect, is that for our broader research process, we have embedded ESG as a core part in how we carry out our research. Now, it is not a standalone dimension we are talking about. We are talking about an additional dimension which fits in well with our broader research. So when we go and travel into a country, we try to understand in terms of the social aspects which will bring about more stability, continuity in terms of the political cohesiveness. So the factors are more realistic rather than theoretical. The source of data are from multilateral agencies, and again, we look at these numbers from a 3-year horizon, revisit them every 6 months. Now, the index brings about large transparency because we are giving score every 6 months with forward-looking 3 years. So again, it's open for people review. So it is not a hidden work which we are trying to do, but focus is really be as transparent as possible on the 13 parameters in terms of the forward-looking number. Now, the other issue or challenge running an ESG study, specifically on the sovereign or government side, is that if you run a score over the 13 parameters, you will have all the developed economies doing well and the emerging markets having a low score. Because there is a very solid correlation between per capita and the ESG score. Because developed economies have more resources to spend on social, environment, education, and many other issues. But for us, we would like to maximize each unit of capital to have a better impact on the world. So what we have tried to do is focus more on the delta, which is the change of score. Which are the economies where you are seeing the maximum progress on the ESG rather than the current score. And if we look at from that perspective, you will find economies like Poland, US, Italy actually going backward. Markets like Argentina, Brazil, India progressing, because these economies are now focusing more in terms of hard infrastructure, removing subsidies, taking that money for more long-term social benefits, having more transparency, getting more independence for the institution. And these are actually the economies where we believe the forward-looking governance and social aspects are going to be more strong. So our approach really is in terms of looking at the delta, the change or the direction, and we would rather be more constructive on the economies where the progress is moving ahead. If we just keep looking at the absolute score, probably we are not doing a justice to the smaller economies which are attempting to progress and move more matured on the ESG curve. And these are the economies which require capital to further consolidate. So we would look at country as more capacity and capability to move ahead on the ESG rather than the developed economies which have already matured at a level but are gradually declining. Again, just to sum up, we have tried to put a relative pointers in terms of why the delta for Italy is going down, but for Brazil is catching up. Now, I would not go deep in terms of Italy, probably you all have more insight than me, but there are a couple of key challenges beyond populism which we have tried to put, which is in terms of the labor law flexibility, low female labor participation, infrastructure, capacity to further put resources in infrastructure development, and these are the drag in terms of the ESG score. But when we look at market like Brazil, the independence of the institutions, the government willingness to take tough reforms, to bring about more transparency, to allow the private sector to dominate the government intervention. And I think these changes really would allow the economy to progress more on a sustainable path with better quality. So that's really our thoughts on ESG and market outlook. But my wishes to all of you all as a great year in terms of investment and to find some great sustainable and impactful investment. Thank you.
Buon pomeriggio anche da parte mia. Soltanto un paio di informazioni di carattere meramente operativo. Il nostro spazio si chiuderà non al termine di questo intervento. Alla fine del nostro speech potrete ritirare un piccolo tagliandino blu con il quale al nostro stand dopo, se vorrete, potremo prendere un aperitivo insieme e magari scambiare due chiacchiere su quello che vi abbiamo raccontato in questo spazio. Ovviamente il mio speech sarà in italiano, non avrete più bisogno delle cuffie. Buon pomeriggio a tutti, sono Massimiliano Grillo. A me il compito semplicemente di guidarvi all'ultima parte dove avremo la possibilità di fare delle domande a Vivek, semplicemente per vedere come oggi sono posizionati i fondi di cui abbiamo parlato, quindi i fondi Global Macro di Franklin Templeton, Templeton Global Bond e Templeton Global Total Return. I fondi, come sapete, si poggiano su tre pilastri fondamentali. Il primo, una duration corta, meno 1 anno e 61 per il Global Bond, meno 1 anno e 43 per il Global Total Return. Il secondo, una selezione ragionata, basata su anche un'analisi, come abbiamo visto, ESG di paesi emergenti, che rappresentano una buona percentuale del portafoglio, ma è una selezione. Dopo vedremo in che termini selezioniamo gli emergenti. 61% per il Global Bond, 75% per il Global Total Return, questo al fine di ottenere dei rendimenti in media in portafoglio superiori alla media di mercato che è offerta oggi dal mercato obbligazionario. Il terzo pilastro è il nostro posizionamento, le nostre convinzioni per quanto riguarda la parte valutaria sviluppata, dove siamo lunghi dollaro, corti euro, lunghi dollaro, corto yen, e infine abbiamo anche un ulteriore posizionamento lungo dollaro, corto dollaro australiano. Emergenti, come selezioniamo gli emergenti? L'abbiamo visto, Vivek è stato abbastanza chiaro in questi termini, cerchiamo dei mercati emergenti che abbiano dei fondamentali buoni, delle prospettive interessanti anche e soprattutto per quanto riguarda lo score ESG, però in particolar modo di queste percentuali che sono percentuali importanti nel nostro portafoglio, noi facciamo una selezione di emergenti, di paesi emergenti. I paesi emergenti che selezioniamo in particolar modo, quelli su cui siamo principalmente focalizzati, sono quelli che vedete qui: Messico, Corea del Sud, Brasile, India, Indonesia. Di questi 5 paesi che vedete sono tutti esposizioni denominate in valuta locale, tranne eccezione fatta per una, quella della Corea del Sud, che è espressa interamente in valuta forte dollaro. Una contrapposizione abbastanza forte che abbiamo rappresentato in questa slide rispetto al benchmark, che invece, come vedete, è concentrato su 5 paesi, però con un bias, con una predisposizione di investimento molto più legata ai paesi sviluppati. Paesi sviluppati che vedete, America, Giappone, quindi vedete già la contrapposizione rispetto a quello che è il nostro approccio, rispetto a quello che è l'approccio dell'obbligazione tradizionale. Un'obbligazione tradizionale che è caratterizzata da rendimenti molto più bassi, noi abbiamo dei rendimenti che fanno quasi stropicciare gli occhi. Questo perché? Perché vogliamo, il nostro obiettivo principale è quello di liberare rendimenti superiori alla media di mercato. In questi anni ce l'abbiamo fatta, questa slide parla da sola, su tutti gli orizzonti temporali siamo stati superiori al nostro indice di riferimento. Noi, lo sapete da sempre, Franklin Templeton si dichiara benchmark agnostica, e allora guardiamo anche quello che è il peer group, quello che è la media dei nostri competitor. Come vedete, contro l'indice, l'istogramma verde, che è quello del benchmark, e contro l'istogramma azzurro, che è quello del nostro peer group, abbiamo sempre rilasciato dei rendimenti sensibilmente superiori alla media offerta dal resto del mercato. In particolar modo in questa sede mi concentrerei su quello che sono state le performance dell'ultimo anno. Questa è una performance degli ultimi 12 mesi, quindi 28 febbraio 2018 contro 28 febbraio 2019, dove vedete che effettivamente abbiamo avuto una sovrapperformance rispetto sia all'indice che al nostro peer group. Come l'abbiamo fatto? Principalmente grazie alla componente valutaria, che ha dato una performance di 9 punti a 44 in questi ultimi 12 mesi, la componente legata alla duration negativa, quindi al nostro posizionamento sulle curve americana e emergenti, è stato un detrattore di valore, ma nonostante questo siamo riusciti a liberare una sovrapperformance di quasi 7 punti rispetto al nostro indice di mercato, rispetto ai nostri competitor. Perché questo posizionamento basato su quei 3 pilastri? Perché fondamentalmente il nostro fine ultimo è non solo darvi performance sostenibili e forti nel tempo, ma anche darvi la possibilità di creare vera diversificazione all'interno del vostro portafoglio obbligazionario. Questa è la nostra correlazione media, che vedete essere mediamente bassa o il più delle volte negativa rispetto a quelli che sono gli strumenti che trovate, che utilizzate tutti i giorni nella costruzione dei portafogli per i vostri clienti, della parte del portafoglio fixed income, quindi obbligazionario. E come vedete, il nostro posizionamento, il nostro interesse è quello in questo contesto di mercato, in un contesto di mercato in cui ci sono dei rendimenti in risalita, non soffrire questi momenti difficili sulla parte obbligazionaria. Siamo consapevoli del fatto che da qui ai prossimi mesi sarà complicato riuscire a dare dei rendimenti interessanti sulla parte obbligazionaria per i nostri investitori, però noi evidentemente con questo posizionamento stiamo riuscendo nel nostro intento finale. Reagiamo in maniera differente ogni volta che ci sono queste finestre di volatilità sul mercato obbligazionario, reagiamo in maniera differente rispetto ai nostri competitor. Con questo non vogliamo dirvi di preferire noi ad altri, ma di ragionare nella costruzione del portafoglio e di utilizzarci come effettivamente quello che facciamo meglio, diversificazione all'interno di un portafoglio obbligazionario. C'è spazio per tutti, riteniamo che Global Bond e Global Total Return possono rappresentare una buona fetta, una buona porzione del vostro portafoglio obbligazionario diversificato a livello globale. Io chiudo, vi ringrazio per l'attenzione e richiamo Vivek per le domande. Ci sono domande per Vivek? Altrimenti parto subito io con una. vado io con una domanda. Vivek, abbiamo visto come di fatto l'America Latina sia una buona, abbiamo un buon focus sulla parte America Latina nel nostro portafoglio. Se ci puoi dare qualche evidenza del come mai, cioè del perché in questi ultimi 3 anni abbiamo spostato il nostro focus di attenzione dall'Asia all'America Latina, e in particolar modo se vuoi raccontarci qualche storia in merito a qualche paese di questa area geografica.
Our love for Latin America goes beyond food. So, but certainly there are a couple of key developments which we really like about Latin America. The first one is, in general, we see that part of the world is letting go populism and they're moving towards more orthodox policy. They are allowing the market factors to drive the economy. And we are really encouraged by the broader policy. You take, for example, Argentina, you take, for example, Brazil. They have really progressed ahead from a broader policy front. Now, between Asia and Latin America, I think the big gap really has been on the valuation side. We had seen many of the Asian economies, the valuation becoming tight, but for Latin America, with that progress in the early stage, the valuations were very attractive. Now, we also recognize that story like Argentina, it's not a 1-year story or 2-year story, because they have a decade of bad policy which they need to cleanse and move ahead. But again, when we look at what the government is trying to do there, is probably correct the fault lines which have been created over years and years of bad policy. So they have started with the basic: clean up the statistical department, bring about technocrats, settle with creditors, removal of subsidies, bring about monetary policy and currency policy which are more appropriate, and in the end correct both the external sector as well as the fiscal. And that's why even IMF, who had sanctioned Argentina in past, has been more than excited to give a $57 or $56 billion package, just stamping the policies initiated by them. And that's what really attracts us. Shift from populism into orthodox policy, and a good valuation visible to enjoy for coming multiple years.
Beh, a proposito del populismo non è che si ponga molto a favore dell'Italia, però va bene. Domande? Prego. Ce n'è un microfono? Grazie.
Sì. Buongiorno. Più che una domanda è una considerazione, diciamo, sul discorso della curva dei tassi, fondamentalmente, che è la parte che più mi preoccupa nel total return nel global bond. Cioè voi avete una visione ovviamente molto chiara. Il decennale non si sta comportando decisamente secondo la vostra visione, anzi tutt'altro, cioè diciamo che è sceso parecchio nell'ultimo periodo. Cioè una rassicurazione soprattutto per i clienti, perché ha una forte esposizione in questi fondi e sono molto preoccupati i miei clienti. Che cosa potrebbe far cambiare visione a voi, o cosa veramente potrebbe spingere questo decennale a risalire un attimo? Se no ovviamente il total return del global bond credo che rimarrà sempre abbastanza penalizzato.
Sure.
Grazie.
Well, your points are very real. In the recent time, rather than the interest rates going up, we have seen them rallying from 3.2% to all the way from down to 2.3%. So I will take the easier part of your question first and then move to the other part. The first one is, what will make us change our view? Obviously, if we believe that US economy is getting into a recession or a prolonged contraction of growth, we would certainly change the view. But as shared, that we don't really believe that US economy is there yet. It still has a strong consumption supporting the growth. Now, why the Fed has moved more in terms of a neutral path, also it has to do with the broader uncertainties surrounding the world, which was in terms of the US, China, the large sell-off of the equity market in December, but we have seen the progress since. The market high frequency data has improved. Market is again looking or getting more confident in terms of the US economy, but that is not critical for us. It is not important whether the Fed hikes the rate 1 time, 2 times or 0 times. Our concern is more structural issues in US, which is very relevant for the long end of the curve. So we are not taking a call on 1 year or a 3 year or 5 year bond. What we really are taking a call is for a country where the fiscal deficit is expanding and the buyers are shifting out, wage inflation is moving up, core inflation despite the technology deflation, low oil price, low agriculture price has been closer to 2% mark. Why the economy needs to have the long-term interest rates at 2% or around that vicinity. And the shift out of the policy buyers to the economic buyers would actually push the levels to a more sustainable path, which is closer to the nominal GDP. And over last 40, 50 years, if you really see the relationship between the nominal GDP and the long-term interest rates, there are convergence. So the question is, where is the nominal GDP for US on a sustainable basis? So let's look at the core, or rather the inflation target of Fed, which is 2%, and the potential growth rate, real growth rate, which is 2%. So if you add the numbers, we come to around 4%, and that's where we think the long-term or long maturity bonds, the interest rate should move towards. It's not the first time the central bank has moved the goalpost from domestic economy to the global economy. But when we look at the Fed stated objective, they have 2 objectives. The first one is full employment and the second one is the price stability. And both these indicators really should eventually put Fed back into the policy normalization. Rather, the risk for the US economy is more if the Fed doesn't normalize the policy, because it will create a financial asset bubble, and that probably can lead to a recession or a overheating. So our argument is the danger for the economy with a loose monetary policy is much higher than with a more normalizing or more tighter monetary policy. So we really feel from a structural aspects, the long end of the curve should continue to move up.
Spazio per un'ultima domanda. Va bene. Grazie a tutti per la partecipazione, ci vediamo allo stand.